Good morning, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report, where I take a look at the technicals that are driving the currency market. Today's date is April 19th, 2023. Let's get started. Taking a look at the euro versus US dollar, what sticks out to me here is the inability of the market to get back above the 100-hour moving average. As you can see, in trading actually on Monday, the market traded above and below the 100-hour moving average and fell below that level, moving to our low for the week on Monday, and then rebounded back higher. And the high price that we saw in yesterday fell short of the 100-hour moving average, and the high price in Asian sessions today really came up to the high price from yesterday and fell short, well short of the 100-hour moving average again. So the sellers are more in control. On the downside, what we did do in trading today, or trying to do, is stay below the 200-hour moving average. That's a green line in this chart. Now, again, we've been trading above and below it all through the week so far. So it's not necessarily the most important technical level, but you never know when the price is going to break one of these moving averages and then use it as a key barometer for the next move, like it did right here, where the market came down to the level and found support buyers against the 100 and 200-hour moving average. Boom, pushed to the upside. So we broke below it, corrected up to it, and we're going to see if we can find the sellers against that level to push the price further to the downside. Now, this yellow area right here is another key area that I'm paying attention to, have been paying attention to. It represents this ceiling right through here, to let you can see how that developed. And then it became a little bit of a floor through here, and then we broke back below the floor and made another ceiling through here. So you can see the pattern that happened here. Now, admittedly, on Monday and Tuesday, the market got a little bit messy here, and in trading here today, the market also fell below this key swing area through here in my book, but it still is alive, and we'll see if the price can hold below the 200-hour moving average here today, find sellers against that level, and push down through the 109.25 level and stay below that level. We don't want to see any of this type of action on the next, if we get back below that level. We want to see further momentum to the downside. We're moving toward the 50% retracement, maybe moving down toward this area right through here as well. So that's euro versus US dollar, leaning more toward the downside. We'll see if that momentum to the downside can continue. Let's take a look at the dollar versus yen next, and I'm going to look at the 4-hour chart, not the hourly chart, but the 4-hour chart, because what happened in trading here today, which keeps the sellers more in control, is we moved up to this swing area, this yellow area between the 135.11 and 135.36 level. We actually just got above the 135.11 level, as you can see right through here, and found sellers, and I'm pushing down over the last 4-hour bar down to 134.42. So we've already moved about 60 basis points to the downside, back below the 61.8% retracement in the process, which is probably going to be our resistance if the sellers are to take control. The importance of this is it did help hold this old ceiling, which became a floor, which then became a ceiling. So that was sellers were leaning, ready to go against that level, and indeed they helped to push the price to the downside. So that is key and keeps the bears in play, and the bias more focused on that side into the early U.S. session at least. Once again, watch the 61.8% retracement. See if that level holds resistance here, and see some sellers against that level. We have stocks moving lower, but yields are moving higher, which sort of runs counter to the idea that the dollar yen might move to the downside. But technically speaking, I like the fact that the sellers came in against that level and put a ceiling on that pair in trading here today. Let's take a look at this dollar versus US dollar. And CPI data come out that was much higher than expected. They're expecting 9.8 for the year-on-year inflation from 10.4. Came in at 10.1, still above the 10% level. Food and non-alcoholic beverages rose the highest level since 1977 or something like that, which was 19.1% year-on-year. It's a problem here for the pound versus US dollar. Nevertheless, the market moves up and down, up and down, up and down, and the rally to the upside here today that took the price above the 200 and 100-hour moving average. All for that data failed and the market started to rotate back to the downside and into this swing area through here, which can be defined by roughly by some levels through here. Now, it's not necessarily the best swing area, but we did find some so a lot of different lows and some highs in areas where the market sort of moved away from this level before rotating to the upside. So for traders, this 100 and 200 hour moving average will still be a key barometer for whether we're going to go higher or lower. Already the market buyers got burned once on the break to the upside, thinking off of the inflation data, thinking that the UK is going to, or the Bank of England is going to continue to tighten. Going to have to tighten more, with some actually calling for 4.75% as the terminal rate. Once you get fooled once and the price rotates all the way back to the downside, you need to watch these levels right through here. 100, 200 hour moving average for clues from a technical perspective. If the price can get above that level, okay, we'll open the door to the upside and live with the volatility that we're seeing here. But but I wouldn't be surprised if we see sellers against this level because it failed, just because. All right, let's take a look at the dollar versus Canada. We are seeing a break here in the early North American session with the price, actually late London session, early North American session, with the price breaking above the 50% retracement and the 200-hour moving average. That's the first break since here above the 200-hour moving average. So it's somewhat important. That level is going to be used as a key support in trading here today. If the price can remain above 134.26, then the buyers remain firmly in control. Earlier today, the price traded above and below the 200-day moving average. It's green line in this chart, and was able to push off of that level, as you can see right here. And that paved the way for the move to the upside, getting above the 200-hour moving average, 50% retracement level. That level is going to be key in trading here today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.